Hey YouTube, welcome back to Project Finance, and in today's video we're going to go over week 8 of the Dividend Challenge. If you're new to the channel, the Dividend Challenge, where I invest $200 every week into my portfolio, no matter how good or bad the market is, with the goal of having $20,000 by the end of the year. Right now we're only using M1 Finance as a portfolio. Hopefully next week we'll have Robinhood ready. I cleaned up all my Robinhood portfolio last week, so hopefully next week I'll have it ready to go for you guys to show. And before we're getting started, let's go over some news happened last week. I know the channel is meant to be more lighthearted, but unfortunately last week someone passed away due to trading stocks. And you guys see that my portfolio does really well, or we're still in the positive, but you know, there is a downside to trading that you can lose money. So unfortunately someone committed suicide. He was using Robinhood as a platform and he racked up $700,000 of debt on option trading, and I don't think he knows what was going on, like what was actually happening. I read a little more into it because the information isn't all out there yet, because I think Robinhood has the rights not to release this information, as well as family has the rights not to release the information of what truly happened. But from what I read was that he misread what was happening. I don't think he was truly in debt $700,000. I think he just read it wrong, but he was in debt through option trading. I think he had a leverage account, because I think he initially only had $16,000 in there invested, and somehow it came up to $700,000. So I don't think that's even possible to have a leverage account of over 6 figures when you're only 20 years old. Like, my credit limit is only around $70,000 to $80,000, and I've been doing credits for about 10 years and I haven't reached 6 digits yet. So like, for him being a 20-year-old still in college, having like no real job, how did he get $700,000 leverage account? I don't think that's possible. So once the information is more released, then I guess we'll find out. But I think he just read it wrong, or he was not as educated on how to use option trading, and he thought he was at $700,000 debt, which is a really scary number. Like, it's almost $1 million in debt. And yeah, it's really unfortunate. So, you know, you guys see that my account is up and like it's easy peasy getting these money and stuff like that, but it's actually not. If you guys are unaware, stocks is a zero-sum theory, where for someone to gain, someone else has to lose. So for me to be up to $600, someone has to be down $600. So just be aware of that when you guys are trading, and you know that it's not all fun and games. It's actually serious business, and it's actual real money people are losing. I would never recommend anyone doing leverage account, that's for sure, if you guys don't know what you're doing. Essentially the same thing as buying stuff without actually having the money. Like, if you don't have money to buy something, you guys shouldn't put on credit, because that's when you jump down the rabbit hole and you owe a ton of interest and you never be able to pay it off. And the credit card company have you caught already, so by then it's too late. And it's the same thing with leverage trading. If you guys don't have the money to trade stocks, don't borrow money, just trade stocks. Use your own money and be comfortable losing that money. I always say, like, once you put that money in stocks, I think about it that you lost it already, so you don't feel that bad when you lose it. So have the mentality that you already lost the money, and I think you should be more comfortable trading at that point. For sure, if you don't have the money to pay for next month's rent or take care of yourself, you should definitely not be trading stocks. Take care of yourself before you have money to play with like this. And with that being said, let's jump into this portfolio. And with any new news with stocks, I don't think anything much changed, except for that I remember last week I said that Orange County had the no mask required law that passed, but California came back in saying everyone's required to wear a mask. So I guess we're in mask territory again. So I don't think that changes it much in stocks perspective, but let's just jump into my portfolio here. I believe last week I was up $700. Let's see if we're still at that number. Hopefully we're still at that number, if not higher. Let's see here, and we're at $693.39. Last week we're at $700, so we're down a total of $7. We're still above water here, so not too bad. So we're at a total of $12,287.97, up a total of $693.39, and total return of 7.15%. Let's look at the week here. So there's a dip here, and then it went up. I'll just let you guys know that this going up is the $200 deposit every week, so it's not like the stocks went up that crazy. Like, it didn't jump $200, but it did jump $40, because right here is $12,043, and right here is $12,287. If you take out the $200, that's a difference of $44. And so since last week, we're down $8.44 and down 0.07%. As long as we're above water, I think we're cool. So let's go down to our first slice. Aggressive ETF pie, we're up $462.44, up a total 9.59%. Let's go inside. Everything is positive except for SHY again. This stock is not doing well at all. It's a treasury bond. I believe I read an article saying that bonds is going to reverse soon. That actually is like the worst thing to invest in right now. So if you guys have your money in bonds, bank bonds, like I think you should take it out and just throw it into the market. And if you guys really want to do bonds, I would just recommend putting your money into high yield investment accounts. I know a good one's Capital One. That's what I have in right now. They have a bonus right now that's every $10,000 deposited, you get $100, which is like a 4% APY because you need to have it there for I think 90 days. So if you do the math, it comes out to be like 4%. I'll do it for you guys right here. I'll do the math for you guys. It's a little hard to calculate, but the way I thought about it was it's $100 for 90 days, which is 3 months. And there's 3 months in a year, so times 4, and then divide this by $10,000, and that's 0.04, which is 4%. So that's pretty good investment, 4%, free money essentially. And also, while it's in there for those 90 days, you're also getting another 1.3%, I think right now what it is, APY. So you're actually making a little bit more than 4% in that investment. And after the 90 days, you can leave it in there if you want to, make it 1.3%, which is not too bad as well. Or you can take it out and invest it into the market. And 4% is actually really good in respect to the market right now, where it's around 2 to 3%, and you don't have to worry about it going up and down. So it's pretty safe, and you can take your money out whenever you want, and it's your money. You don't have to worry about taking it out when the market's down and losing money. So if you guys are really scared of the stock market, I would highly suggest you guys looking to high yield investment accounts. Capital One's a good one, and I think the other one was HSBC. I recommend Capital One just due to the fact that it's in America and it has a better name in America versus HSBC. But yeah, let's move on. The highest percentage for this slice is VWO, which is up 13.5%. Second is VB. VWO has actually been doing pretty well the last couple of weeks. I think it now the front runner for this pie. VB and VNO has been doing really well the last couple of weeks, and now VWO is kind of getting up there. But this is unfortunately something I have small stocks as well at 5% in both of these small ones. But yeah, let's go look at the last week here. I'd assume, yeah, everything's kind of evened out. VO is up 1.05%. VNO, which I just said that it was doing really well, has gone down 2.13%. So let's go to the next slice. Dividend hunting up $189.54, up a total of 7.9%. Let's go inside. Everything doing above 5%. I'm cool with that. Let's go look last week. Yeah, everything up except for agency. I think agency's dividend just dropped. That's why I think it dropped in prices. Look at the detail here. Yeah, it dropped on the 27th. I think it's dropping soon. 27th. So it should drop on next week. It's interesting actually. Usually stocks go up right before a dividend because people won't get in for the ex-dividend date. But this one, it dropped a little bit before the dividend date. It's going to come up in a couple days. It's been dropping since the 16th. Hopefully it stays around the $13 mark. I think that's where I bought it at. Let's see my average buy. And my average bought is at $12.46 and it's at $12.99 right now. I think I'm cool with that. I think it's weird that last week it went down. Let's go back here. See what else happened last week. Yeah, I'm still up a total of $75.68 on AGNC. This past week went down $54.30. But we'll see when the dividend dates come by and see if it drops even more. That might be a little concerning, but I think it should be fine for now. Let's go back to the next slice. So this last slice is growing pies. We're up a total of $41.41, up 1.68%. Let's go inside. A lot of my stocks deflated over the last couple of weeks. It's only up no more than 5%, except for Waste Management, which is up 5.86%, up a total of $21.35. GSK and Starbucks, it's been going down. Let's go over last week what happened. I think Starbucks was positive before. Yeah, it went down 1.91% last week. Total is $5.84. Yeah, last week was not good for all my stocks. It's actually pretty funny because last week I'm a T-Mobile user. My phone was not working at all, like all Monday and Tuesday. It was like not going through. I had to use Facebook Messenger and FaceTime to talk to my friends. I would think that AT&T stocks would have gone up since they're saying they can say like, oh, T-Mobile is unreliable network, you know, but I guess maybe AT&T had the same problem as T-Mobile did. GSK went up $5.51, but I think still negative overall. Yep, it's negative $1.32 and 0.31%. I might sell a stock. This is like very depressing stock. Every week I see the stock and it doesn't do anything. And I don't even think the dividend yield is that high. The dividend yield is 4.78%. It's like it's not crazy high. And it's a quarterly dividend, so I don't know if I want to keep this still. It dropped in May. I might drop this stock just because it really did the quarterly drop. A lot of FOMO going on here. If I sell it and it goes up, I'm gonna be really sad. Let's go back and look at the week for all three pies. Aggressive ETF pie at $62.02, up 1.02%. Dividend hunting pie, negative $45.24, down a total 1.49%. I believe all this is agency being down. And then growing pie down $25.22, down 0.83%. And this one, I think it's due to all the stocks being down. I think last week wasn't too bad of a week. I don't think it grew that much or was negative that much. Hence, overall, my portfolio is only down $8.44. But I think for my growing pie stocks, everything in the industry went down. But let's go into our activity here. So last week was June 15th to around June 17th. So I got my promotional bonus finally. After opening this account for over a month, I finally got it. I had to email them because I think they lost my referral for some reason. So I got their my promotional bonus, and then I referred my girlfriend, like I said in my last video last week. She invested, I think, $1,000 to her account, so $20 invested, and then my dividend for waste management, $2.26. That's really low. I should check that real quick. $2.20. That's kind of sad. At $462 in this, let me see the yield. Yield is 2.05%. I have 4.45 shares. I actually was wondering how the shares, but fractional shares work for dividend. Do they give you the whole amount for the share? It's kind of interesting. I'll do the math on that later. I'll let you guys know in the next video if they actually give you the 0.45878% of dividend yield. Because how you can cut a penny in half like that? Let's go back to the activity here. So my deposit $200 and then my morning trade of $222.77. Yeah, only one dividend this week. Let's go to the holdings here. Look at the highest gains. Highest gains is VB at 11.32%, and second place is VWO at 11.16%. And if you guys noticed that I believe earlier in the pies, VWO was higher than VB, and like I said in my previous video, that it's due to it being weighted gains. So that's why that the VWO is higher than VB. But in terms of unrealized gains, VB is going to be higher because there was more money in VB percentage wise. So let's go to the bottom three. Still GSK, Starbucks, and SHY. They're actually negative now. I think Starbucks was negative last week. And AT&T actually only being 0.89%. That's unfortunate. And I always rave about AT&T being a really good stock to buy just because it's a really high dividend yield, and it's one of the higher stocks that you can buy that are safe. As long as it's still like neutral, like no more than down 10%, then I'm cool. But it's unfortunate that it's down right now. But I still think it's a really good stock to buy if you're in the field of communication. I think it's one of the better ones overall. And that's gonna wrap it up for today's video. Let me know down below if you guys are still running neutral this week. Hopefully you guys are all investing safely and not throwing away your life savings. And lastly, thank you guys so much for watching this video. Be sure to like the video, subscribe to the channel, like this content, and ring the notification bell for any updates. And I'll see you guys in the next one. Bye.